Over the past few months, or shall we say a good 8 years or so, XRP has seen some interesting price action develop. Key factors include regulatory developments, adoption rates, partnerships with financial institutions, and overall community market sentiment. Half the community loves it, half of them hate this coin. To some, I may sound like a broken record player, and that is completely fine. And really, that is the only reason why XRP actually may exist today. Now, I'm one of the few exceptions that currently sides with XRP's future price action, and I'm going to explain it via the Elliott Wave Theory from a macro perspective on why I think there's still a good chance for it to reach all-time highs. Now, we've seen the XRP market move in tandem, most notably with the SEC case from the past few years, and that has helped indirectly create a regulatory framework basis that many are currently not seeing from a fundamental perspective. They have also been creating endless partnerships, and it's also something that may be the reason why the price action has been so stable, because people are seeing this either as an opportunity or, with each pump to the upside, as a rejection. Now, with all that being said, is this something that can be directly translated to technical analysis, perhaps different patterns, and perhaps the Elliott Wave Theory? Absolutely. The Elliott Wave Theory, although it's not perfect, it does one thing that does help provide with trying to understand the price action we have seen for the past 8 years or so, which is the different patterns that is seen with those factors that I have mentioned. And again, this can be achieved with the Elliott Wave Theory. Now, starting right off the bat, we are going to divide these scenarios into different cycles or different distribution patterns. And the Elliott Wave Theory here, again, we work in different nested structures. Now, this nested structure is not the best, but this is what we can get out of it with the current data. So, as you can see, XRP does have one thing that does have an advantage over a lot of other coins, which is price action history. We have seen this price action history developed since 2014 or so, 2013 more specifically. And this first move up, ever since the crypto boom in 2018, has helped create the first, what we can anticipate to be the first cycle degree. And again, Elliott Wave Theory works with a series of fives or threes, impulses and corrections. Now, as you can see, this whole range here, to me, personally is seen as corrections, and that is more of the corrective or reactionary wave against these strong impulses. So with that being said, these corrective three-wave moves are now getting pretty tight and possibly coiling up to one larger expectation to the upside for the final impulse or a continuation of a cycle degree, because we're working with nested structures. So this cycle wave 1, 2, from the 2018 run all the way down to the bear market of 2020, that has created the first cycle degree count, as you can see by the Roman numeral 1, 2. Now, this move up here, this is when we started to see delistings of the coins, and we saw strong overlaps with the price action, and that can be directly translated with an Elliott Wave Theory pattern known as the expanding diagonal. Now, the expanding diagonal, or the leading expanding diagonal, as you can see here, this is the only way I can count a possible move into the next wave 1 of the primary degree, which is the degree below this higher degree of a cycle degree. And after that, we create the next three-wave move, like I've mentioned. Again, fives and threes. We're still working with threes here. So to me, this is a possible WXY. And then we work with the next sort of pattern of a 1-2 idea, and that could be helping with the further given data that we have right now to another possible lower degree extension to the upside that helps fulfill the larger degrees that we're looking for. So right now, as we are working with a possible intermediate degree in this parentheses of an orange, we can see that if this is going to be continuing up in a five-wave fashion and help complete off that fifth of this third will be the part of this current cycle. And with that being said, if once that completes, that'll complete the possible wave 3 of this cycle 1, 2. Now, this isn't the best count. It's not rational in terms of what we can see for the potential of the cryptocurrency markets. We haven't seen any real massive potential to the upside from any other coins, or hasn't given us any real proven track record that the cryptocurrency markets can just continue up. I believe that we are also entering the market maturity phase. So this idea, although it does seem to fit into a possibility of a continuation via the Elliott Wave Theory, it just seems a little bit irrational to think that this is going to continue up forever and go up to, $100 per XRP. Now, there is the argument for market cap. However, I do believe that market cap has its weakness as well. It's just a pure idea or fundamental basis on the idea that there is market demand against supply. That's just it. We've seen that with Filecoin. We've seen that with Ethereum. Price just continued to go up. So XRP is something that I believe that this whole move here, along with the price action being developed from the SEC case, help create a lot of these overlaps into what I believe is different cycles. And we're seeing this as cycle 1-2, primary 1-2, intermediate 1-2, and we may be working very close to another breakout to the upside. Now, what else is another possible accumulation pattern that we can achieve with the Elliott Wave Theory? If this is not a cycle 1-2, 1-2, 1-2, primary and intermediate degree respectively, well, can we see it from it? Well, the only pattern, or I'm sure many of you watching this are at least somewhat versed in Elliott Wave Theory, or Elliott Wave Theory and just normal technical analysis patterns, is the triangle idea. Now, this triangle idea is also much better to be seen as an accumulative range for how we could be seeing this. Meaning that instead of seeing this as a 1-2, 1-2, 1-2, this is starting to look like a triangle. Now, there is a triangle pattern for the Elliott Wave Theory, and we can see that we have a possible WXY. Remember, there can only be one complex pattern allowed within a triangle, or a WXY. And then we have a series of ABCs, or simple zigzag, or idealized zigzags within the pattern of the triangle. So if we're seeing this, and we connect all the dots, we're seeing a 3, 3, 3, 3, and a possible final 3 that we're seeing here. If you zoom out, you could really see the nature of these threes. And how are these threes being created? Well, like I've said, these threes are created because of the fundamental reasonings behind it, which is the SEC case and the community expectations behind this market sentiment and what these partnerships with financial institutions are doing. As you can see, we have all of these threes being created, and that is what we create, this contracting look of a possible triangle. And that right there, ladies and gentlemen, is what creates the waves A, B, C, and D, and now possibly with the E, because this does look like a possible three-wave being created. Now, there are invalidations for this, as we can see. We have broken the AC trend line, or right below it, we did get rejected from that trend line, but that does not invalidate the triangle, as wave E cannot surpass the wave C of the previous subwave being developed. So as long as we are above this wave C, this red dotted line is the invalidation for a possible wave C. Now, this wave C has been held for a very long time, for the past 2 years, ladies and gentlemen, past 2 years. With that being said, we've also been creating strong overlaps within such a tiny range, giving us a little bit more confidence that we actually may be working in an accumulative distribution pattern, and that distribution pattern is being seen as a contracting triangle. So what does that mean? As we get closer to the apex, or the finalization of the triangle area, most notably the 70% area of the apex of the triangle, is that this is starting to coil up. I believe that this is going to be what is possibly the conclusion of the triangle, and if not, we have to see a possible massively bearish outcome of this. And if that's the case, then you're massively bearish on not just XRP, but everything else as well. So there's just no way that I can really tell myself that we're working for a larger move to the downside, especially that this has been distributing for the past 8 years. And this distribution pattern of a possible triangle being built here is the only way I can really be rational with this and be bullish at the same time. So with this rational approach in terms of targets, again, post-triangle thrust movement measurements is based on the largest move of the triangle. And this move here, we can expect at least, or the very least, all-time highs and possibly around the $5 or $6. Now, that's not something we would like to see because we like to see continuation of wave 5s, and we'll usually see strong bursts of volume, especially after a large triangle is being created. And that should bring us up into possibly the $10 or $15 regions. Now, this is just based on technical analysis. None of this is financial advice, ladies and gentlemen, just with a quick disclaimer. I'm just saying that from all of these patterns, these usually strong breakouts usually bring us to higher levels than anticipated. So what does that mean? That means that there also has to be an alternative to this idea, since we are working with the Elliott Wave Theory, possibly as a larger bearish move. Now, could this triangle be developed into a bearish triangle? Absolutely. Maybe it will go up, get rejected, and come back down, and this could be a larger ABC to the downside, possibly a WXY to the downside, this being the ABC. We just don't know yet. And with the current data given, with 8 years of development, I believe that the only way I can see this is a very bullish triangle being created on the macro perspective. Now, again, I'm going to sound like a broken record player, but again, this is the only way I can currently see the price action being developed. And that is why I believe XRP can be one of the most bullish coins for this current upcoming cycle for altcoins. Now, I believe the market cycle for meme coins is now diminishing. We're seeing that within the actual the dominance within the meme coins. We're seeing it go down. And where could that be going? We don't know exactly, but maybe people will be interested in altcoins. And I believe the dinosaur coins, or quote unquote dino coins, is going to be the next possible approach to how people are going to be looking at the cash flow within the markets. So to me, ladies and gentlemen, those are the only two ways that I can currently see it. More zoomed in of the micro time frames or the lower time frames is that, again, I believe that we're creating another 3-wave move, either completing now very soon. Now we could see one more possible low. Again, until it invalidates the triangle, we have to remain bullish with this current count. And as I've said, again, the XRP movement is all just seeing this. I'm just seeing this as a possible price action development as a distribution. That's all how I can see it. So either this one too is now completed and we're seeing some major bullish continuation to the upside, or we see one final thrust movement to the upside, possibly reaching us into the $8 or $10 region with that triangle. That's kind of my current approach. I don't like to be massively bullish. I like to be a little bit more rational and see things as a conclusion rather than a continuation of something, just to be on the more side of risk management. And I think that's the case with the current wave counts, ladies and gentlemen. Hopefully that was helpful. I hope I didn't sound like a broken record player. Thank you very much. I'll see you guys in the next video. Have a good one. Bye-bye.